Hi, this is James at Westpac with our London end of day report for Wednesday, August the 29th. The negative vibe continued in European markets today. Global growth concerns persist. On top of that, we had Germany's Merkel and Italy's Monti bickering about the status of the European Stability Mechanism, the ESM, the Permanent Bailout Fund, which doesn't actually come into existence yet because we're still waiting for the September 12 ruling from the German Constitutional Court. Monti continues to argue that it should get a banking licence so it could borrow money from the European Central Bank, which it could then use to support peripheral bond markets in Europe. But Merkel says that's against the treaty rules and not a good idea. We've heard these arguments on both sides before from them and from many other people. ECB President Draghi, quoted in the German press, gave a very sensible speech about, well, not a speech, but wrote an article, very sensible article, basically saying that the future is not going back to separate currencies. It's not a United States of Europe. It's just picking out the bits that you need to have some sort of overarching authority for, such as oversight of fiscal policy, and finding the minimum that you need to ensure the future success and prosperity of the euro and Europeans. He made the point too. Where is it? Now the ECB will do what is necessary to ensure price stability. It will remain independent and will always act within its mandate, but it should be understood that fulfilling our mandate sometimes requires us to go beyond standard monetary tools. When markets are fragmented or influenced by irrational fears, our monetary policy signals don't reach citizens evenly across the euro area. We have to fix such blockages to ensure a single policy and therefore price stability for all euro area citizens. This may at times require exceptional measures, but this is our responsibility as the central bank for the euro area as a whole. Now, that's something he's kind of said before, but he's saying it in Germany. It could be perhaps a signal that he's trying to soften them up or prepare them for something that they might not like the sound of on Thursday, September the 6th, after the next council meeting, or at least fairly soon after that, if nothing is really delivered at that date. So just have to wait and see on that one. On the data front, German inflation accelerated from 1.7% to 2% in August. No big surprise after we've seen some of the state figures. Energy prices are factored there. In the US, second quarter GDP growth was revised up from 1.5% annualised to 1.7%. There were quite a few compositional shifts. For example, less weak spending on durables by consumers. Net exports and inventories were revised quite substantially, but they offset each other. Business investment was a little bit weaker than previously estimated, but overall we had that slight uptick in the quarterly growth pace. Home sales that are pending, not yet completed, rose 2.4%. They're up 17% over the year. Yet another sign that while there's concern about the US economy slowing, while there's risks from fiscal policy and abroad, the housing market, finally it seems, is starting to do a bit better. Later on tonight we get the Fed's beige book. That's their regional assessment of how the US economy is doing ahead of the next FOMC meeting in 2 weeks' time. That'll be out in about an hour and a half's time. That's about it, I think, in terms of news to report. Hurricane Isaac has made landfall and looks like it's going to avoid offshore oil platforms and is not expected to harm oil supply. In fact, oil prices have fallen quite sharply today. I'll get onto that in a sec. In fact, yeah, on markets, the equity markets around the place, London market down just over 0.5% at the close, French market down 0.5% as well. The Germans managed a 0.1% gain, and Italy and Spain both down around 1/3%. And as I speak, the Dow's unchanged at 13,106. A lot of speculation, of course, about what Ben Bernanke may or may not say on Friday at Jackson Hole. For what it's worth, I don't think he'll say much. I think it's too close to call in terms of the Fed decision next week, in 2 weeks' time. And it's just not in his style, I think, to preempt what his colleagues will ultimately decide. He'll discuss the range of options, but probably won't give us a hint. But we'll know in less than 2 days. He speaks at 3 p.m. London time, I think, on the afternoon of Friday. In terms of commodity markets, as I mentioned, oil's down quite sharply, 1.4% off. It's at $94.97 a barrel. Not just the fact that there was no damage done to oil supply, but also the storms apparently have cut demand for oil, and also stockpile figures showed a run up in the latest week. So a few downward pressures there. Copper prices off 0.6% today, and gold's down 0.5% at $1,660 an ounce. Aussie dollar, it had a little blip up to 1.04 against the US dollar, but it's back down around 1.037 at the moment, in the recent 1.035, 1.04 range. In Australia, we've got building approvals figures for July coming up Thursday, and also the second quarter capital expenditure figures, which help feed into our forecast for GDP, which is coming out next week, the second quarter economic growth report, and also we get the CapEx outlook survey in that report. Something to look out for in Australia then. All right, I'll be back again tomorrow.